what I looked at this week, I looked at an article about the app Robin Hood. Have you guys heard of this app before?
I have heard of it, yeah.
A little bit, yeah.
So I guess apparently the app allows, it's very popular among millennials, is what is what the article I read said. But I think, the features seem like they'd be popular to anyone in the sense that it's a trading platform that allows for free trades in terms of stocks and other kinds of investments like EITFs and things of that nature. And so that kind of got me inspired. I think I'd heard about Robinhood maybe just in the background as something that maybe I saw an ad for or an article for or something in the past. But when I saw this particular article, it inspired me to look into it more. The article I was looking at was actually talking about the fact that the Robinhood app is part of this emerging industry that they refer to as Fintech, which is financial-oriented products and services that are combined with technology, probably most prominently with apps would be. Mm-hmm. And so the Robinhood app, that's a trading platform that you can trade stocks. I haven't even looked at it myself, but I'm imagining it's like something you can do on your phone.
Yep.
So, that would be a prime example of a fintech type company, right? And I know a little bit from having talked to other fintech kind of companies 2 to 3 years ago, people who worked with fintech type companies 2 to 3 years ago, is that they were kind of like technology companies that were a surface layer that would layer over the top of traditional finance companies. So like banks, like online banking platforms and things that were designed to be kind of a smoother, more elegant user interface for a bank online or in an app format. In those early stages, those companies weren't actually banks themselves. They were basically just the surface layer that would go over the top of a traditional bank, and they would be underwritten by another bank that was the actual bank, right? And so what was interesting about this article to me is that they were talking about how Robinhood was attempting, and maybe this was more widespread, that other fintech companies were trying to become federally chartered banks in and of themselves. And apparently there was an agency with the U.S. government, a federal agency that, and I don't remember the exact name of the agency, but it actually had rolled out some rules and a program to actually help fintech companies do this, like a streamlined program specifically for fintech companies to help them more easily become federally chartered banks. And Robinhood was pursuing this, and that's what this article was about, that Robinhood was pursuing this, but it got called to a halt because a federal court in New York said, hey, wait a minute, this federal agency running this program just didn't have the authority to set up a special program for fintech like that. And so they called a halt to it, and that meant that Robinhood and anyone else in the fintech community that may have been trying to rely on this program had to plan to go through the normal process and procedure to become a federally chartered bank, which I can only imagine is a pretty onerous and highly regulated process. And so, as you might suspect, then Robinhood, what the article was about, it was how the app Robinhood, the company, promptly withdrew their application to become a federally chartered bank once this program was no longer available to them. So yeah, that was that particular article. But I want to tell you about another part of it, because that's kind of almost like inside baseball, almost a little too technical and industry specific to be super interesting, other than just from my standpoint, just understanding whether these apps are actually banks themselves or not. But that inspired me to kind of look at anything else going on with Robinhood. And just a couple of days ago, another article came out. I think it was from Fortune, and they were talking about how looking from the outside, because Robinhood is a private company, looking from the outside, it appears that Robinhood may be similar to other technology startups that we've seen in recent history that look like they're plays for really high margin technology companies, but in fact, under the hood, they're just grinding it out. Like it's really a low margin business. And the article had done enough legwork to understand that the way that Robinhood makes its money was primarily off of order flow or deal flow, and they get kickbacks from market makers for the amount of deal flow that is kind of pumping through the app, so to speak. And the implication that the article was making, and I don't have enough experience to understand that entirely, but the implication was that's a tough way to make your money.
It sounds like it.
That's not a high margin way to make money. And so the suspicion, the author's suspicion was, and they don't know whether Robinhood is actually profitable or not because their financial statements aren't public, but the suspicion was that they may be as unprofitable as some of the other companies that we've seen recently having problems, like a WeWork and Uber and so on. So, yeah.
I just think it's crazy how many of these tech companies are into like a banking type of situation, like Apple Pay, Google Pay. I mean, I don't know what differentiates Apple Pay from like a normal checking account, and whether it's not, I don't know if it's FDI.
Well, that's
Google.
AJ keeps searching his Google.
Always listening.
His Google assistant keeps talking to us.
You don't know something without it looking it up.
I know, right? I'm just going to turn this thing off.
Yeah, I think the interesting distinction here comes in just drawing the fine line between what is a money transmitter versus what is a bank, because I think a lot of these businesses have been kind of walking that fine line as we get closer and blur the lines between those two. And I think it all comes down to regulation and KYC and AML, so know your customer and anti-money laundering policies that are required of both banks and money transmitters, but to different levels. And so I think, having a clear distinction. And like you were talking about, another one of those layered companies that fits between the banks would be Zelle, where they've added their service as a money transmitter into a bunch of existing banks. And so it's another example of this expanding fintech industry. And it's just constantly changing all the time.
Well, and the other ones were like those round up, kind of investment apps that charge like heavy fees, like Acorn. I forget the other one. There's one other one. Acorn was the one that advertises heavily. I can't remember the name of the other one, but there's another similar one that will round up, like if your purchase is for $53.59, then it'll round up to $54 and invest that small amount into like a mutual fund or something like that.
Is that they call it micro investing?
Micro investing,
right?
Yes,
right. Yeah. I mean, I think one of the philosophical issues on this that's interesting to me is these technology companies that are kind of coming in and creating application layers that then can kind of layer on top of the traditional banks. I guess the question that comes to my mind is, okay, why does it take a technology specific company to do that? What is it about the banks themselves that makes them unable to create an app for an app for their own front end? If they're already a bank, like if one of the challenges in the fintech industry is that the technology companies that are basically creating these user interfaces and these apps are not actually banks, and that creates regulatory hurdles for them. Why is there a space for them to do this? Why aren't the banks stepping up and doing this for themselves?
I think it's partially comes from just consistency across banks and platforms and how they are set up. And so it's like when Wells Fargo sets up their system versus when Bank of America does, they weren't designed intentionally to be able to speak back and forth with one another as easily as somebody who's in the middle trying to build a connection between those two and can focus on that problem. Because I think there's just a lot of compatibility, and that's why Zelle is available on certain banks and not others, because it's just whatever that company chooses to focus its resources in. I know nothing really about it, but I can imagine that it could be a pretty daunting task to try to get a system that is compatible with so many banks and, remove some of the timelines and how long it takes to move money and add some functionality that the banks didn't really have.
Sure. I mean, the cynical side of me thinks that it's also like the banks are not wading into that because they look at it as an inappropriate risk for them, right?
Oh, yeah.
And so then they're like, well, let's let these young punks and tech companies, like, we'll let them take these risks and kind of play around in this. But I mean, to me, that says something. That says that maybe, some of these companies that are on the technology side maybe playing a little fast and loose from what we would expect from an actual bank.
Yeah.
in terms of how they're doing things. And that article that I was looking at with regard to Robin Hood was alluding to that issue and saying that there had been some feature issues that could create serious problems for the app and for counterparties and that were using the app, sort of thing. So yeah, I mean, I don't know anything about what that looks like in terms of, well, the other thing that was interesting about that is they said that in order to kind of shore themselves up on that on regulatory and better company oversight, that they had actually just hired a CFO and a COO.
They didn't have a CFO or a COO before. Yeah,
this is a company with I think hundreds of millions of dollars in valuation, if not, just large valuation, and playing in a very big space. And this article was saying that they just hired a CFO. So I was like, what?
Wow.
Maybe all startups are the same.
Yeah. I mean, I was like, well, okay, if that's the benchmark, several $100 million in valuation before you hire a CFO, I guess, nobody in town needs one, really.
Well, could this be an indication that maybe the tech sector is going to slow down? Like, Google and Apple are so large, and they've eaten so many companies by buying them, that all the ones that were good ideas were the ones that were profitable, have basically already been bought, and the ones that are valued now are kind of like the leftovers that look okay for a minute, but I think that the luster wears off when you kind of open up the hood and see what's going on in there.
Yeah, I mean, I think that's I think with all of because most of this news about Robinhood, to be fair to the company, is somewhat speculative because it's private. So there's a lot that we don't know, and the authors are kind of making some assumptions just based on outside observations and an analysis of their apparent business model and so on. But I think that speaks to your point that people are speculating on companies like Robinhood about problems. They're speculating on problems because of the well-known problems in the tech community that have been occurring over the last year. So, I mean, I don't know of a specific slowdown that I've heard right now, but yeah, that it seems like the more news that maybe there's been an overfunding of companies that aren't really able to deliver on the value proposition. The more news like that there is, of course, the more likely there is for people to slow down in funding them, right?
And I think it's also important to just note that this withdrawal of the bank charter application was voluntary by them as well, and so I think it's partially a choice to focus on what they think they excel at and realize, and looking at that decision and deciding, okay, that maybe doesn't make sense for our organizational objectives, and so
right,
yeah, I think it's worth noting.
Right.